All right, listen up, folks. What I'm about to lay out for you isn't some fancy theory. This is straight from the trenches, honed by decades of navigating Wall Street's brutal realities. It's about making smart choices, because poverty often isn't about laziness. It's about picking the wrong partners in this game of life. Buffett's final play, the grand strategy. Picture this: Bill Gates, Tim Cook, Hillary Clinton, and countless other power players, all sitting silently, taking notes like diligent students. Why? Because it was a rare chance to learn from the legend, Warren Buffett himself. This was his final shareholder meeting, and he wasn't holding back secrets anymore. Buffett finally revealed his ultimate strategy: when he'd buy, where he'd invest, and which assets would crash. If you grasp this, you'll see it's the greatest financial chess move in human history. This game plan began in 2003. What the US is doing now mirrors exactly what Buffett predicted back then. He laid out how the American elite would orchestrate this entire play. It's only now, at his last shareholder meeting, that the big net pulling and acquisition phase is unfolding. The meaning? For those who've watched my previous videos, you know guys like Bill Gates and Mark Zuckerberg sold off their company stocks last year, and they perfectly dodged this global market crash. But the biggest winner in this crisis remains Buffett. He held the highest cash reserves in history and strategically invested in soaring Japanese yen assets. Now, you might ask, the US stock market's recovering, right? Logically, if Buffett sold before the crash, holding huge cash, he should have bought in last month. Yet, as of December last year, Buffett's cash hoard was still around $330 billion. That's enough to buy both Goldman Sachs and Morgan Stanley. But his cash hasn't shrunk. It's grown to $350 billion this year. This means Buffett didn't buy during the dip. He's still waiting. Why? Many now believe the market has fully recovered, so surely Buffett missed the bottom, right? He sold everything but didn't buy back. Isn't that a loss? Why does he have more cash after the crisis? He answered clearly at this recent shareholder meeting. He admitted he almost spent $10 billion recently. He said if it were a truly valuable and reasonable investment, he'd easily deploy that capital. But he couldn't pull the trigger. He even mentioned that Berkshire Hathaway shares had dropped more than 50% 3 times in short periods after he acquired the company. He felt this recent market chaos was nothing compared to history. So, what does this mean? He has $350 billion, yet $10 billion seemed unreasonable, too hard to spend. And what he said next truly shocked me. When asked about the risk of a declining dollar, he flat out stated they wouldn't invest in a currency headed to hell. Even more chilling, he plans to spend all this cash within 5 years, keeping only $50 billion. This means he's hoarding dollars now, but will spend them all within 5 years. Yet, he also thinks the dollar will collapse. Isn't that contradictory? He believes the dollar will crash, but holds a ton of dollar cash. He recently hesitated to even make a $10 billion trade. The US market is recovering, yet he says he'll spend it all within 5 years. If you find this contradictory, it's because you assume the crisis is over. But if this recovery is just an illusion, if the real carnage is just beginning, then everything makes perfect sense. If you don't want to be a casualty in this game, or even want to rise to the next level, subscribe to my channel. I'll share more insights. The Island Fable, a warning from 2003. Most people focused on Buffett criticizing the US government at the shareholder meeting. They say he didn't mention the government, but everything he said was about it. For example, he called trade wars and tariffs acts of war, a grave mistake. When 7.5 billion people dislike you and only 300 million Americans are happy, he doesn't think that's right. He believes tariffs and trade wars hurt the US. But is that true? Back in 2003, Buffett wrote an article I'll summarize. There were 2 islands, Thrift Island and Spendthrift Island. Initially, both worked 8 hours daily, self-sufficient. Then, Thrift Island decided to work an extra 8 hours. They used their extra production to trade with Spendthrift Island, who only needed to write IOUs. Simply put, Thrift Island did Spendthrift Island's work, and Spendthrift Island just wrote IOUs. Until one day, Thrift Island exchanged all those I owe us for Spendthrift Island's money. Then, they bought up all the land on Spendthrift Island. Spendthrift Islanders lost their land and had to pay rent to Thrift Islanders. They also had to work 8 hours daily to pay off debts and interest. From then on, Spendthrift Island became Thrift Island's colony. In 2003, Buffett used Spendthrift Island to describe the U.S. He said Americans no longer did hard manufacturing. They outsourced it to the world. Thrift Island. They borrowed money by issuing bonds to pay the world. The result? One day, the world would be like Thrift Island, bringing U.S. bonds and IOUs to exchange for U.S. dollars. Then, they'd use those dollars to buy up American land and resources. Americans would then have to go back to hard labor to repay debts and pay rent to the world, controlled by everyone else. Simply put, previous generations borrowed, and future generations inherit the debt. So, Buffett came up with a solution: issuing import certificates to all U.S. exporters. It's simple. Say I'm a U.S. car exporter, selling $10 billion worldwide annually. The U.S. government gives me a $10 billion import certificate. I can sell this to U.S. importers who bring goods into the U.S. After U.S. importers buy this certificate, they can then import $10 billion worth of foreign goods. Since U.S. importers pay for this certificate, that money ultimately goes to foreign exporters. They pay an indirect cost to sell to the U.S. Simply put, if you want to sell goods into the U.S. today, you must buy an import certificate from U.S. importers. Without it, you can't sell to the U.S. That money then goes to U.S. exporters, who profit and pay taxes to the U.S. government. If you don't understand, that's okay, because this is essentially identical to the U.S.'s current tariff mechanism. The U.S. government now claims tariffs are because the world is profiting from the U.S., forcing Americans into debt. If this continues, other nations will eventually get rich enough to buy up the U.S. That's why the U.S. imposes tariffs. If you want to sell to the U.S. and earn American money, you must share a portion as tariffs. But the U.S. government calls it tariffs, while Buffett called it import certificates. And if done Buffett's way, that import certificate equals a 100% tax on the entire world. He wanted to ensure the U.S. only imported as much as it exported. Therefore, many believed Buffett was criticizing the U.S. government for tariffs at the shareholder meeting, but he actually proposed a similar plan in 2003. Moreover, he wanted to go even further than the current U.S. government, advocating a 100% tariff on the world. What's called tariffs today is something he suggested in 2003. The U.S. is just following his playbook. Yet he criticized tariffs as an act of war. Isn't this contradictory? Not really. Tariffs are taxes. Import certificates are like admission tickets. Different names, different natures. For example, buying a concert ticket is normal. But if you had to pay a tax to attend a concert, nobody would go. So Buffett isn't against taxes. He just disagrees with the term tariff. Since 2003, he'd already crafted a story and justification for U.S. tariffs. It's the story of Thrift Island making all the money from Spendthrift Island, then buying and colonizing it. If you believe that story, that of Thrift and Spendthrift Islands, your country will be bought by the U.S. What does that mean? Here's the key point. What's the truth in reality? Can the world really exchange U.S. bonds for all of America's land and assets right now? If that were true, wouldn't the world already own the U.S.? Wouldn't America be a colony of the world? But you'll find the truth seems to be the opposite. America owes money, but it doesn't really have to pay anything back. It just prints money. Not only that, it can print money to buy assets worldwide. Why? You can find the details in my last week's video. Here, I'll just say it simply. The world has earned a lot of money from the U.S., but what the U.S. owes is U.S. dollars. When it's time to pay, they just print dollars and it's done. And every time a financial crisis hits, U.S. capitalists grab those newly printed dollars and buy up cheap assets around the world. For instance, in South Korea, the largest shareholders of Samsung, LG, and many banks aren't Korean, they're American. In other words, Spendthrift Island not only wasn't bought by Thrift Island, but instead colonized it. If you believe the Thrift Island story, and you work hard hoping to one day earn enough US dollars to buy America, the end result will be you getting bought out by the US. This is the grand strategy orchestrated by the capitalists. So, while you're working hard, remember to look up at the sky sometimes. If you think that by not investing, not starting a business, and not spending money, just diligently working and saving, no one can take your money, well, when the capitalists simply print money, inflation will immediately steal all the value of your cash. Then you can't afford a home. Your money keeps losing value. You're stuck renting forever, just existing, not truly living. Trouble won't just avoid you if you don't seek it. You have only two choices. One is to become the exploited Thrift Islander. The other is to become the Spendthrift Islander who exploits others. What advantages do we, as small investors, have compared to giants like Buffett? It's flexibility. Buffett might plan his asset purchases or sales a year in advance. We just need to wait for confirmed capital flows. Once prices are about to surge, it's not too late to jump in. This means the big players create the trends. We just follow them, make our money, and get out quickly. So why did Buffett propose the import certificate policy, which is essentially tariffs, back in 2003? Because that year, Buffett realized the old US method, lowering interest rates and printing money to harvest the world, would eventually lose its effectiveness. When that happens, a new method, tariffs, must be used to continue harvesting the world. What does that mean? Before, whenever the US economy slowed down, just lowering interest rates by about 5% was usually enough to rescue it. When interest rates drop, the cost of borrowing for business and investment decreases. Lower costs mean higher profits, right? For example, in the 1981 recession, the Fed cut rates from 18% to 13%. In the 1991 recession, rates dropped from 9% to 4%. In the 2000 recession, they went from 6% to 1%. You'll notice interest rates kept falling. Until the 2008 financial crisis, the Fed directly cut rates from 5% to 0%. But the US economy still didn't recover. It's like a patient needing medicine, but after each dose, the body builds more resistance. Before, 2 pills worked. Later, it needed 5, then 10. Eventually, the medicine stopped working. Similarly, in 2008, lowering interest rates to 0 was useless. The only option was to inject money annually, meaning quantitative easing, printing money and offering it at near 0 interest to capitalists for business and investment. In 2008, over $3 trillion was printed. By 2020, with the pandemic, another $5 trillion was printed. US national debt keeps growing, and now no one wants to buy US bonds anymore. Even if the Fed keeps interest rates high and the US pays high interest to lenders, US bonds still won't sell. If no one lends money to the US anymore, and the US can only print money to spend, the dollar will become worthless, going to hell. So, by 2025, when lowering interest rates the medicine no longer works, and printing money the injection also fails, they'll resort to Buffett's 2003 method tariffs. Tariffs are like a defibrillator, shocking the US economy's heart back to life. To put it simply, before, the US was responsible for printing money, while the rest of the world did the hard, dirty work. This allowed the world to accumulate wealth and labor for Americans. It made the world believe that if you just worked a little harder on Thrift Island, one day you could buy up the US. Therefore, US money had to be continuously spent abroad. The idea here is that the US had to constantly spend money on the world. Then, through selling US government bonds, it would pull dollars back from global hands. Simply put, the US printed money to buy your goods. You earned US dollars, then lent those dollars back to the US. This way, the US had an endless supply of money to keep buying your goods, only needing to pay you a little interest each time. Initially, the US only needed to lower interest rates to solve its debt repayment issues. But later, as people on Thrift Island gradually realized Americans were using a trick, getting goods without working, they started buying fewer US bonds, meaning they lent less money to the US. When that happened, the money the US had spent couldn't be recovered, and without borrowing, lowering interest rates became ineffective. So the US had no choice but to expand its balance sheet, continuing to print money to spend. Now, in 2025, people worldwide are buying fewer and fewer US bonds. Lowering interest rates or printing money no longer attracts global capital. So, a new method must be used: tariffs. This is to reclaim money from the world, even forcing global factories to return to the US. Simply put, before, the US transfused blood to the world. Now, it's sucking blood from the world, forcing the world to serve the US. In other words, Spendthrift Island no longer needs Thrift Island for labor. Instead, it directly relocates all labor from Thrift Island to Spendthrift Island. So, the center of power shifts. When tariffs combine with the US dollar heading to hell, what game is the US playing? Everyone should know that tariffs have severely depreciated the US dollar. A few years ago, when US bonds were still rising, many bought them, meaning they lent money to the US. This year, 2025, a large amount of US bonds will mature, meaning the US has to pay its debts. Those who lent to the US, if they don't reinvest in US bonds, will have to convert dollars into their national currencies, right? And what happens if the dollar is in free fall, depreciating severely as it is now? For example, in 2020, interest rates were very low. You bought US bonds and only got a 1 to 2% yield. Now, the bonds mature and you get that interest. But when you try to convert dollars to Japanese yen, euros, or Taiwanese dollars, you find your currency has appreciated by 10%. This means the dollar lost 10% of its value. The result, you gained 1 to 2% interest but lost 10% due to exchange rates. So you have only two choices. 1. Don't continue lending to the US, accept the loss and withdraw. 2. Continue buying US bonds. Because US bonds currently offer up to 4% interest, and the Federal Reserve is likely to continue printing money, this 4% rate is considered very high. If you buy in and lock in this rate for 10 or 20 years, waiting for the dollar to recover and rise again, you won't lose anymore. But the reality is, you have no other choice. You can only keep buying US bonds, specifically long-term ones. So, one effect of tariffs is to force capital to be locked within the US, unable to escape. This way, US bonds will continue to be bought, and the bond demand crisis will be resolved. But once people prefer accepting losses over continuing to buy US bonds, what I mentioned in my previous video will happen. The US will be reborn from fire, meaning a financial crisis will erupt to harvest the world, then print money again to restart its economy. If you don't understand this principle, you can re-watch my previous video. Currently, we see that Buffett still hasn't bought the bottom. Not only has he not bought any stocks this year, but he continues to dump bank and financial stocks. Dumping means he's not holding on to a single share. In other words, Buffett is still betting on the biggest financial crisis in history. Why? First, if what Buffett says is true, that the dollar will go to hell, meaning it continues to drop 10%, 20%, even 30%. What does that mean? It means if a financial crisis truly occurs, all the money invested in US assets worldwide will be trapped, right? In a financial massacre, no one can escape. If you try to run, you'll die a more tragic death. You'll lose not only from plummeting US stocks and depreciating US bonds, but also from the dollar's continued decline. You'll only lose more. The value of US capital assets could be used to buy your dumped assets at a cheaper price. Second, if the dollar continues to depreciate, capital flows will be cut off and can no longer enter the US. In other words, if you see US stocks collapsing and the dollar also falling sharply, you'll be even more hesitant to buy US stocks. Because as soon as you invest, you'll get stuck. This will be a fight for survival. If you're a foreigner and your money is stuck in US assets, you won't be able to get out. You might think this is contradictory because Buffett holds $350 billion, but his cash ratio is only about 25%. That means he only keeps 25% of his assets in dollar cash, with the remaining 75% still invested in US assets. If US assets collapse and the dollar also depreciates, how does that benefit him? Friends, most of Buffett's assets aren't publicly traded stocks. Although 75% of his assets are invested in US assets, less than a quarter of that is in the stock market, and most are in companies like American Express or Coca-Cola. These companies won't go bankrupt and will continue to pay dividends. Buffett earns from business operations, not stock prices. The majority of US assets Buffett holds are through outright acquisitions of unlisted companies. So, if the US collapses, do you think that greatly affects him? Plummeting stock prices have no bearing on unlisted companies. As long as the companies he invested in don't go bankrupt during a financial crisis, they'll continue to generate profits for him. He makes money from business operations, not stock prices. Second, even if the dollar goes to hell, it won't become completely worthless. Does this have a big impact on Buffett? It's like you're Japanese. You don't travel, don't buy foreign goods, don't invest abroad, and only spend Japanese yen domestically. Even if the yen depreciates, it won't affect you. Similarly, Buffett holds over $300 billion, but he can't convert it to other currencies. This money can only be trapped within the US. For example, a previous $8 billion transaction caused the Taiwanese dollar to appreciate by 10%. If Buffett converted all $300+ billion to other currencies, the dollar would truly become worthless. Buffett isn't advising us not to hold dollars. He simply has no other choice but to be forced to hold it. His money can only be stuck in the US. You see, even when investing in Japan, he could only borrow money from Japan and use Japanese money to buy Japanese assets. He couldn't use his own dollars. This means even if a financial crisis occurs, even if the US collapses and the dollar depreciates, it won't greatly affect Buffett because his money can only be invested in US assets. If the financial crisis is a battle for survival, if it can trap all the capital poured into US assets for many years, even cutting off global capital's access to the US, then Buffett, who can only spend money within the US, will be the biggest winner in this crisis. He even explicitly stated that when a crisis occurs, there will still be opportunities to buy assets at extremely cheap prices. He said that within the next 5 years, he will reduce his cash holdings from $350 billion to $50 billion. This means the remaining $50 billion in cash is actually the minimum operating capital needed to run his companies. For example, an insurance company needs to maintain about $20 billion in its account to cover insurance claims. So, if he spends all the money he holds and keeps only $50 billion, it means that within the next 5 years, specifically before Trump's term ends, there's a strong possibility of a buying opportunity that Buffett considers extremely reasonable and cheap. This opportunity is even more attractive than the current major crisis. Buffett has clearly stated that the recent movements in the US stock market are not a big fluctuation at all. This is not a real bear market. In other words, this current collapse for Buffett isn't even an appetizer, because he still hasn't made his move. Instead, he's dumped all his bank and financial stocks. Because when the dollar goes to hell, the heaviest losses will fall on banks and financial companies. By 5 years from now, meaning 2030, Buffett will have completed bottom fishing, and what he buys will be US assets, because he can only buy US assets. After 2030, US assets might soar again. Like Buffett, my primary currency is also the dollar. The difference is his capital scale is infinitely larger than mine, so he can't just randomly buy assets. He can only buy short-term bonds to avoid risk. As for us, we started investing in gold, Bitcoin, and the Japanese yen last year. Why? I've explained it many times. The reason is I need to find safe haven assets to hedge against the dollar's depreciation risk. As long as the safe haven assets I buy increase more than the dollar depreciates, I can at least preserve the wealth I earned last year. But right now, many people see a slight recovery in US stocks and immediately convert all their money to dollars to invest. I believe everyone has their own choices, and we should respect them. I can say that the risk of investing in US stocks right now comes not only from the US stock market itself, but also from the currency market, specifically the dollar. Suppose you are Japanese. If you buy Japanese stocks to bottom fish and profit from a rebound, at most you'll lose if the Japanese market declines. But if you're Japanese and buy US stocks, when US stocks fall and the dollar also falls, you'll lose on both ends. Simply put, if you invest in US stocks today, you might profit from the stock but lose on the exchange rate. Then your assets will be stuck in US stocks. Because as soon as you convert your money back to Japanese yen, you've already lost. And if the door closes, when this financial massacre truly happens, the people who die will be those who are recklessly rushing into the market right now. For me, since late last year, what I've wanted to do is avoid risk, not seek profit. Profit should be sought in the easiest markets, not during uncertain recoveries. If I profit, it's just a little from a rebound. If I lose, I might just be trapping myself. Finally, if any details in today's video weren't clear, I recommend re-watching my previous 2 or 3 videos from past weeks. I'll just say a few words. My videos have a strong logical connection. If you don't watch the previous videos, some might think I only speak after events happen, but many things were actually said beforehand. I can't explain everything from scratch every time. That would be too tedious, and the video would be too long. The situation recently has become even more chaotic, but due to time constraints, I can only stop here. I share free information on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, I still advise you to follow my channel and turn on notifications. Then, freely share this video with others. I sincerely wish all of you who like this video early financial freedom. If you found even 1 or 2 useful insights in what I said today that help improve your life a bit, then I'm already content.